Welcome back, and joining me for the day's markets action is Andrew Podoa from Sasfin Wealth. Andrew, thanks so much for your time today. Now let's get things started and start off with a general markets action. At the beginning of the week, we saw markets pushing through, powering through, with US markets hitting record highs yet again. But things took a turn yesterday when both the S&P 500 and the Nasdaq were in red territory. Surely this is a surprise considering how dovish Powell had turned, as well as that softer inflation print we got out of the US. Just take us through the disconnect here.
Sure. Well, thanks so much for having me in, Taoling. If we look at US inflation, yeah, you're right. Inflation came down, and that should be bullish for equities. But I think what we saw was a bit of a rotation out of the Magnificent Seven and more to the smaller cap stocks in the US. The Magnificent Seven and a handful of other stocks have effectively been driving the total returns you've seen in US stocks for the last 18 or so months. So I think it was maybe just a bit of a rotation to those smaller cap stocks. Lower interest rates are good for the smaller businesses, and I think that's kind of the thinking there.
Now, with earnings season kicking off today, we have the banks releasing results, but I actually want us to just talk about earnings season as a whole. I read something earlier this week where there was expectations that US earnings would grow by 8% in the second quarter. But when you strip out the top 10 companies, US earnings seem to be pretty flat. So I know you mentioned the rotation. We're seeing the rotation out of tech stocks at the moment. Would you say that the US markets are just being held up at the moment by that AI boom and all the stocks associated with that?
I think that's a fair comment. I've heard someone say there's actually a stealth bear market going on in the US, but we're just not seeing it because these big seven stocks are making everything look, fantastic. We've got the banks reporting today, starting with JP Morgan, Citigroup, and Wells Fargo. So what I'm really looking for from those results is to see how the actual US consumer is doing. US interest rates are at a 23-year high. They've gone from 0.25% at the beginning of 2022, and they're now 5.5%. That's a big swing. So how are US consumers coping? We've seen Pepsi's results yesterday. Pepsi said that consumers are becoming a little bit more price conscious after years of price hikes from Pepsi. We've seen Nike and Lululemon under a bit of pressure. So I think the bank's results today, it'll be quite interesting to see how the US consumer is coping with these high interest rates.
So we are starting to see somewhat of a tightening in purse strings when it comes to consumers in the US. Now, from one booming industry to another, the weight loss market. And recently, Pfizer announced that it is making progress with its weight loss pill. This, of course, as it attempts to break through that market. Do you think it stands a chance against the likes of Novo Nordisk and Eli Lilly?
So Eli Lilly and Novo Nordisk are winning this race. They've been doing these drugs successfully for some time now. At this stage, the drugs are only available via injection, not the oral pill. And I know that's what Pfizer said they are working on. But Eli Lilly and Novo Nordisk have also been working on the oral pill for some time now. So Pfizer's spending $130 billion a year, I think it is, on this project to try and catch Lilly and Novo. It just feels binary. It's either going to be really great for Pfizer and they can catch Novo Nordisk and Eli Lilly, or the drug's going to fail and Pfizer's going to be in heaps of trouble. And this is the challenge with investing in pharmaceuticals. The drug either works or it doesn't. There's no real in between here.
All right, that's a fair comment to make. Now, let's shift focus to some local news. The SARB is meeting next week, and most economists expect policymakers to keep rates on hold. Where are you at, Andrew, considering the kind of data we've been seeing coming out? As we mentioned, softer U.S. inflation, a cooling labor market in the U.S. And here at home, we've also seen inflation starting to slow, even though it's not at the midpoint of the SARB as yet. We've also seen the rand strengthening. Does this give the SARB some breathing room?
I think it does. We should see, in my opinion, we should see interest rates in South Africa starting to fall in the very near future. Inflation is pretty low, 4.6%, so we're kind of around that mid-range. GNU was very positive for markets. We've seen the rand strengthen. We saw US inflation is coming down. not at the Fed's 2% target, but it's coming down. So it just seems that inflation around the world is coming down and interest rates should be following suit shortly.
I'm crossing fingers and toes for that because South African consumers really, really do need that reprieve. Let's move on to some.
Absolutely.
Let's move on to some company news now. Andrew, 91 is out with an update, noted a slight uptick in assets under management, even in this tough economic environment. What have you made of that update?
Yeah, so the assets under management just under 129 billion pounds. That's about a 4% increase from the same time last year. So, slowly ticking over, growing steadily. Markets have done more than 4%, but they're not purely an equity house, so we can't read too much into that. But not a bad number for growth, 4%.
We also had Capitec out with an update. They're expecting growth of up to 35% in earnings for the half-year period. Your take on that update, Andrew?
So that's a fantastic number. They said, group earnings should be 25 to 35% higher. I think we just need to zoom out a bit here. Yes, those are great numbers, but last year Capitec was growing a lot slower. It was in the single digits. The reasons were high credit impairments due to high inflation, high interest rates, load shedding, difficult economic environment for customers. Capitec also noted they've done an acquisition, so that also would have distorted the numbers a bit, but 35% is still a great number.
All right, Andrew, before I let you go, let's get your stock pick for the day.
Yes, so my stock pick for today is TransDigm. TransDigm is a holding company in the aerospace business. Their companies sell products that include things such as pumps and valves, motors and controls, ignition systems, and cockpit security systems. These products may sound simple, but they're often really highly engineered, proprietary aircraft components, of which TransDigm is the sole supplier. So they're effectively a monopoly. And there's also very high barriers to entry in the aerospace industry. There's very strict regulatory approval to have products in aeroplanes. So TransDigm's a great business. Basically a monopoly, high barriers to entry. It's one we like.
TransDigm, one to look out for. Andrew, thank you so much for your time and those insights. That was Andrew Podoa from Sasfin Wealth.